back for a second one, and this one is not so much going to be us, but more going to be Jennifer. So I'm actually going to step out here in just a minute. But we're back for the second Summit Live, and we're talking about a very timely and a really, really common topic of discussion with us and our clients around the election.
Definitely, yes.
Yeah, so we had the vice president debates last night, and if you can call it a debate, the presidential debate earlier. Was it earlier this week? Or was it
Last week.
Last week.
Yeah.
That's the topic today, and Jennifer's going to kind of go through. We've got some pretty cool, and this is only the second round of our Facebook Live, so we'll see how well technology works for us today. But we're going to try to.
Involved.
Yeah. We're going to try to. I'm going to be behind the camera, but we're going to try to have some slides because there's a lot of data points that I think can be really beneficial that you guys will appreciate. So we're going to try to get those up. They might be really small if you're looking at this on your phone, but we know that, and we're going to explain. I say Jennifer's going to do her best to explain those. Kind of what you might be able to see there. So I'm going to switch over. All right, and I think I'm going to test one. Yep, so it's coming. So that's a sneak peek of the graphics coming. But I'm going to step out and let Jennifer take it.
All right. Yes, welcome. So yes, the hot topic is definitely the elections, and it's a very, as you will not be surprised to hear, a strongly emotionally charged topic among people on all sides of the issue. And it seems that no matter which side of the continuum of politics that someone is on, they're very concerned about their investments. And so we're here to really give you some context around that and what has happened historically, and hopefully kind of put your minds at ease a little bit. We hear people saying, should I move to New Zealand if X wins or Y wins? Should I be stockpiling food? And there's no question, these are unusually tumultuous times, and not just from a presidential debate perspective, but many other things that are happening in our economy. So I want to show you this first slide, and I want to see if you can discern a pattern. And I'm going to, here we go. So right now you don't really even need to see the data points, although I will make it bigger. But the question is do you see a pattern here? And red represents Republican presidential terms, and blue is Democratic. And most likely, no, you don't see one. I'm going to make it bigger. But you can see what the annualized return for each presidential term was for their entire 4-year term. So it's by 4-year term. So if someone had more than one administration or or more than one term, then that is represented by 2 lines. So you can see there's really no predictable pattern here. It really, on the positive side, are both blue and red lines. So then the next question is, well, what about shorter term returns? Because those were all 4-year time periods, and generally the stock market is always positive, not always, but almost always for a 4-year term, no matter when it is. And it's rare, and it really takes a severe economic experience to have a 4-year time period where the stock markets are negative. And I want to point out, we'll talk about this more in a bit, but when we say stock markets, there's more than the S&P 500 involved here. And that last slide was the S&P 500, and so is this. This particular slide is just showing you the returns for the 1 year. So the year before an election is in green, and the year after the election is in gray. And you can see still most of the lines are to the right for positive returns. And in fact, the average annual return during an election year is 11.3%. Quite positive, actually. And I think a lot of that is it's just like I give someone this analogy about surgery. When you have surgery, the unknown is what makes us so uncomfortable when we're facing up to it. But once we know what we're dealing with, then we can formulate a plan and deal with what's happened next. And I think part of that is that phenomenon, is knowing what's happening and going to happen, hopefully. So this next slide is, well, what about international markets? Because really the U.S. market is half of the world's stock markets, but it is not all by any means, even though we're just by far the hugest single entity. But this particular slide is showing us the international developed indices. So these are the countries like the Japans, the Germanys, the UK, all these kind of Australia, Canada, larger countries. And you can see again, the predominant experience is positive. Again, we see the same, there's less data points here. These are emerging markets because the indices have not been in existence as long as the others, especially the S&P 500. But again, you can see there's no discernible pattern. So then what happens really, these numbers don't mean much unless you can actually see the growth of wealth, right? We really want to know, what can we buy? What does 10% or 5% mean to us? We really need to know, what is our end game here? How have we grown? And this chart shows you the growth of $1 during all presidential terms back from 1926. And you can see in the far left the effect of the Depression. And we can see also the effect of, now 2020 is not in here yet, but I would point out 2008, which is right at the end of the Bush administration, the second Bush administration, and how really awful that was. And it really scarred people a lot, those negative returns. But you can see, when you look at it from a long-term perspective, it really was not fun, but we did recover and grow beyond that. So the next point is, well, okay, maybe it doesn't matter if your president is a Democrat or a Republican, but we have Congress to deal with as well. So it doesn't matter which party is in control of Congress. So this slide will show you pretty much the same effect as what we saw from the presidential side. We have dips, we have some not so pleasant times, but stock market participants and consumers continue to participate, and over time, our dollars grow. Companies are motivated to make profits. That's why they exist. And so companies find a way to make and sell products that people want during all economic cycles, political cycles, and they will continue to do so. There can be headwinds. Tax policy definitely can be a headwind against success with that. But in the end, what drives stock prices is profitability of companies. So stock markets have rewarded long-term investors, as you could see by those last two graphs. This last particular visual is about the bond market. The bond market is relatively stable from a volatility perspective compared to the stock market, right? It's like the rock in the storm in your portfolio that is supposed to kind of help your portfolio hold value when the markets get negative, but it's also to return some income, which has been a lot less than usual historically lately in recent years. But this graph shows you the Bloomberg Barclays aggregate bond returns have been positive in every administration. And what will happen from here, I don't know. I would imagine interest rates will creep up at some point, but there doesn't seem to be any pressure for that at the moment. So what is our advice, and what should we do? There's I guess the main point here is, besides the fact that it is unpredictable no matter which party wins any election, we can't say with any certainty that one party or another has a better or worse influence on your wealth and growth of wealth. There are so many other factors that affect your portfolio performance and what happens in the stock market. There is interest rates have an effect. What other countries do? Is there a geopolitical problem? Are there tariffs imposed on other sides? Is there a global pandemic? We all know that one really well right now, right? What happens with oil prices? Because that affects the ability to transport goods, as well as just the oil company prices, right? And technological advances also affect stock market profitability and thus prices. And we do know that the economy has not been in a good place since the pandemic. You can't shut down businesses everywhere and expect any sort of economic growth. We do know that small mom and pop sort of businesses have been disproportionately affected, but they're not participants in the stock market as far as the value of their companies. So that's one reason you see this disconnect between what's happening in the economy and what's happening in the stock market. But the stock market is also forward looking, and it recognizes that we are slowly dealing with this pandemic and slowly opening back up, and we're expecting profitability going forward. So with all that said, our advice is we know that nobody's crystal ball works, and we recommend that our clients stay invested, that they own stocks from all over the world, not just the US, definitely not just the S&P 500. Look for opportunities to rebalance. If we see a big dip in the markets again, we'll be buying more stock for our clients, because that is one way you can add to returns over time. So, and then capture that recovery with those money. It's like buying bananas on sale, right? When they get more expensive, you can sell them. That's not a good analogy though, since bananas go bad. But really is you buy low and then sell a bit later when the price has recovered. So I hope this has been helpful. It's been fun to be back. Mike's coming back in the screen.
I'm gonna ask her some questions and put her on the spot.
Oh, you didn't warn me about this.
No, I didn't. This is quick here, so we can see if we can get.
I'm gonna get rid of the slide.
I can get rid of the slide, but I actually want to go back to.
Oh, okay.
One of the first ones.
Okay.
So one of the questions I wanted to ask.
Yeah.
We had talked about in the past, and I don't remember the details, but some of these big down ones, there were other factors.
Yes.
Right. That were.
Big economic factors. Of course, that bottom red line is the Great Depression, and the government at the time actually exacerbated the depression and the economic activity. So there are a couple major factors that happened there. One is the people were going wild with the stock market, and they were borrowing money to buy stock that then became less valuable, and they couldn't pay back the money because they'd lost too much value, and that's what was bankrupting so many people. People were jumping off buildings. It was horrible. But then the government also became very protectionist and didn't stimulate the economy, but in fact decelerated economic growth, which made that such a prolonged and horrible event, and which are there were a lot of lessons learned from that I don't think current leaders, even in the last since then, would ever repeat. The upper one, the fourth one down in the second term of Bush, there were a couple events that were going on there. One is we had 9/11 that happened there. We had the .com. People were, again, euphoric and buying .com stocks, right? And the big example is Pets.com, which is they had $1 million and they put everything they had into a Super Bowl ad, and then the company went bust. So there was a lot of excitement. People were paying more than these companies were worth, and then reality sunk in and the markets crashed. And then second, of course, is the big financial crisis in 2008 and 9, which was fed by real estate issues, not political issues. There were policies put in place. There was always a political influence, but years ahead that had contributed to people borrowing more than they could really pay back, and it took the economy a while to grow out of that.
Yeah,
Excuse me.
I think a lot of there's definitely people react, and that was another question that I wanted to ask, because you used the term that the economy. See if I can get us so that we're not looking at the slides here. You mentioned that the economy is so forward-looking. What does that exactly mean? Like,
yeah, well, the markets are forward-looking, and so what they say, okay, we're dealing with today that the economy is not doing very well, and people aren't spending as much, although Amazon might disagree with that, but they're saying we can see that there is a path out of this. We can see people are coming back to work, and we can see that people are starting to spend more, and that means that companies will grow because their profits will grow. And so market participants look at all these factors. They look at interest rates. It's very inexpensive to borrow money, right? People are buying real estate left and right now because rates are so low, and they want somewhere to go, so they're buying second homes because the pandemic's preventing them from travel. And so that also stimulates the economy, because what happens when you buy a new house? You buy more stuff, right?
Yeah.
And you pay for moving, and that is all stimulating to the economy. Even just paying someone to help you move, you're putting money in someone else's pocket who's going to go out and spend it on something else. And so that's how it is forward looking. It's seeing what people are starting to participate in that will add profitability to companies.
Yeah, I think of it often because clients will have this thought or this idea, and right now it's the election, but around, whatever, it could be specific to a company that they have some information, and it's not insider information, it's public information, and they think that they're ahead of the market by knowing that.
But
When
they're
in
not.
reality, the market knows that as well. They see
They
that
do.
as well.
There's so many market participants. Information is digested very fast and is always is reflected in the prices very quickly.
Yeah, we've heard, and if this may be getting into the weeds, but some strategy of some clients thinking that they can wait until bonds, bigger companies declare dividends, and trying to sell and earn that money ahead of the market, but everybody knows what those dividends are as soon as they're declared. So it's priced into.
It's already priced into the stock.
Yeah.
Yep, it definitely is.
Which kind of lends to that, I think, as well.
Yeah.
So the last thing that I would mention is not specific to the presidential side, but on any other topics, any other information that you guys are interested in hearing or seeing, even the level of detail that we go into on these. We'd love to see feedback on the slides if that was even helpful.
Yeah.
I will say specific to the this information and this topic, we do have some detailed interactive PDFs that we're going to send out to our existing clients. But if you're interested in that, and again, there's no kind of marketing push for anything. We're not going to be hammering.
We won't be calling you.
We won't be calling you. But if you want that information, we'd be happy to send it to you and kind of give you access to that. So just either send us a message through Facebook, or you can email us at that info@summitrva.com. And I think that's it for this one.
Yeah. So hope you enjoyed it.
Awesome. Thanks, everybody.
Thanks.